We're here on Monday, and the major U.S. stock averages are extending gains, and we are seeing the Nasdaq down as well as S&P 500 trying to recover from last Wednesday's rout. Now, we do have to keep in mind that defense stocks are higher today, and this does come on the heels of the arms deal that was signed over the weekend. Joining me now is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, we're seeing the equity averages higher today, and we're almost at the levels we were on Tuesday at the close. But given what we're seeing in defense stocks, what do you expect to see this week?
Well, look, the news out of Saudi Arabia between the United States, the trade deal is a big deal. It's a huge deal. And so I think the market is taking a breather here in terms of the political situation. And so, of course, we're seeing the defense stocks outperform. And that's basically what's giving this market a nice rally today. But going forward, it's going to be a week where we're certainly looking at the price of oil. It does look as though OPEC will extend its production deal, and I think that we might get a bit of a surprise.
And indeed, we'll keep an eye on the OPEC meeting. Of course, all of the details will be closely monitored to see how big the cuts will be and how long they will be. But I do want to shift our focus back to the U.S. We do have the Trump administration releasing its first budget tomorrow. We do also get the Fed minutes. We have to keep in mind that we have a 3-day holiday weekend ahead of us. So what do you expect to see?
Yeah, well, look, in terms of the macro data, obviously, we'll be looking at the revision in the for the growth in the first quarter, which we're looking for a slightly upward tick. And of course, this quarter we're looking at growth probably somewhere between 2.25%, 2.5%. And that's due to the fact that a lot of the macro news that we've been getting has been improving. In fact, we saw that with the Chicago Fed National Activity Index today, which went up by about 39, 40 points. And that's a good indication that that the economy is beginning to perk up again. I think, once Trump comes back, we probably go back to that worry factor. And I'm saying this because, Comey is going to be testifying. And until we get that out of the way, I don't think the Trump problems are behind him just yet.
And very quickly, Peter, before I let you go, I do want to get your take on what we're seeing in the FX markets. Now, German Chancellor Angela Merkel, she talked about the euro and the record trade surplus in Germany, and we saw the euro trade higher against the majors. But what do you make of her comments?
Well, first of all, Germany is the only real beneficiary of the euro, so they need to see a stronger euro. But, the dollar has been weak, not because of her comments today. It's been weak ever since we got into this political uncertainties. And so I kind of think that Merkel's remarks are not really boosting the euro. And I think the dollar is flashing a warning sign. What is that warning sign? It's simply this, that we might be facing a crisis of confidence in the future. And if that happens, we can see a weaker dollar. That's not going to be beneficial because that means that the Fed might actually have to step in and might have to be more aggressive in raising rates.
Well, Peter, thank you so much for joining me ahead of the week, and I wish you a happy holiday weekend.
Thank you.
Thank you.